as State Bank of India, one of the largest lenders in the market, are you reassured that the decision to keep status quo will ensure that at least your NPAs, the non-performing assets that you have, are not going to increase, and whatever losses that you have taken on the treasury portfolio, at least that will not be worsened because of further deterioration in your asset portfolio?
Well, fortunately for us, we are comfortable today on liquidity. But as far as the bond portfolio or mark-to-market losses are concerned, it will all depend on how quickly things settle back to normal. If yields remain what they are in September, certainly the September book will show significant mark-to-market losses, because bond yields today have moved up by 50 basis points on an average. And the expectation that the yield curve would get inverted and only short-term rates would move has not been realized. The fact is that yields have moved all across, or even including 10-year. So we will hope that this will come back faster than usual. But yes, to the extent that some rates could well have been raised, we are obviously comforted that rates at least have been left the way they are. You know, how much the current measures have led to stability of the rupee is something that can be debated very endlessly, and you know, there is anecdotal evidence to suggest that what has happened now had begun to happen even on 15th of July. But you must grant it to RBI. I agree that, you know, they can't just sit and wait and watch. And to that extent, you can't really fault them beyond a point. But yes, growth must take center stage. That's what we have been feeling for the last 3 or 4 quarters. We need to take a risk. We need to take a punt, if you may call it that, and plump for growth, because really if everything is structural, it's only growth which will address whatever problems we are in. The fundamentals of the economy are what are getting reflected in the volatility and the rates.
Sajid, the governor spoke about the impossible trinity and how it has become very difficult for the RBI to really manage all three. The impossible trinity, as all economists will explain, is that you cannot have an independent monetary policy, free capital flows, as well as a pegged exchange rate. So now that the RBI is focusing on the external side, do you think they've given up on an independent monetary policy and we really are at the receiving end? Whatever the US Fed takes, we'll have to take it or leave it?
That's right, and I think the governor sort of admitted that if you just looked narrowly at the growth inflation dynamics in the short run, growth momentum in fact has slowed further in the last quarter. Inflation pressures have come off. If you look at WPI, we've had a good monsoon. So if the external sector had stabilized, the currency had not depreciated, that would clearly argue for more monetary easing. But as you rightly pointed out, you know, emerging markets and developing countries do have to contend with the impossible trinity. You know, classical textbooks will tell you that when faced with BOP pressures, you must just let your exchange rates depreciate, because that becomes the equilibrating mechanism. But it's not so simple if you're an emerging market. There are very strong and sharp balance sheet effects from exchange rate depreciation. There's an inflation pass-through because we're a net commodity importer, and there's a pretty significant fiscal impact. So faced with those constraints, one has to draw a balance between independent monetary policy and policies that need to be used to stabilize the exchange rate, albeit temporarily. So really no surprises there. I would simply argue that I think this also has implications down the line, that exchange rates, as I've argued before, if you're in a free fall of the currency, that is not growth positive either. That's also going to hurt growth somewhere down the line. So a very difficult balancing act, and frankly, there are very few good options for the governor at this point in time. We have to go back to first principles, which is reduce that current account deficit to more sustainable levels, and let's make India independent of hot money flows, which have been the cause of this problem over the last few years.
Mr. Mittal, this question is coming your way, and Mr. Mittal, Reserve Bank of India is really trying to maintain a fine balance, but the problem is that they're only trying to cure the symptom here, not the disease, and the disease is that we have a structural problem.
I fully agree with you. Monetary policy can play a very limited role in the economic growth of the country at any point of time. The fundamentals of the economy have to be strong. Over that, it can come as an icing on the cake. But unfortunately, we have started believing as if monetary policy is the only solution to the economic growth problems of our country. And that is why all the emphasis by everybody on monetary policy and too much of pressure on the RBI, to come to the aid of everybody.
Manishi, in the run-up to the credit policy, I guess equity markets were expecting nothing from today's event. Nothing has come out from today's event, and still markets are nervous.
Yeah, I think, one of the reasons is the currency. The governor actually talked about the potential withdrawal of some of these, recently instituted measures once the currency stabilizes. And almost immediately we saw almost about 20 basis points weakness in the currency. So I think that was, the reason for the nervousness that you talked about. But I think at the same time, the movement in the market over the last few days was extremely lopsided. The decline in the market that we had seen was almost entirely centered around the banks and the other rate sensitives, particularly banks. And some of the other sectors, like consumer staples, in the early part of the last couple of weeks, really went through the roof, which, now over the last couple of days has begun to correct. So, I think that, lopsided movement is kind of evening itself out. I can actually see some, upward movement, some recovery in the bank Nifty, and particularly in the private sector banks.